And yes, we would like you to reach out to us. Please reach out to us either by calling us 855-DON-GINO or email us your questions, your concerns, your topics, because this is our first 12 to 1 section of our finance hour. Now we're going from 12 to 2 p.m. right here on AM 1220 KHTS, the Don and Gino Real Estate and Finance Show. You can reach us at donandgino@gmail.com. That's DONANDGINO at gmail.com. Send us your questions or give us a call.
Yeah, and one of the things that we actually enjoy the most on, and I hope you share this, I know you do, is that when our listener responds to us or says or challenges us, we love it when people challenge us. Hey, we heard this on your show, it's not true. Then the next week we'll come back and show you why it is true.
That's right, because we also challenge you. We challenge you to make smart decisions, get great information like we shared with you today. We share every week, Thursday now 12 to 2 p.m. And we challenge you to get great information to make smart decisions and take action. And that's what we do every week to help you, guide you to personal and financial wellness. And today, guiding us with what's going on in the economy, Elliott Eisenberg, Ph.D., nationally acclaimed economist and public speaker right here in the Don and Gino Real Estate and Finance Show, coming to you from Aspen, Colorado. How's it going, Elliott? You still there, Elliott?
I am here, indeed, absolutely.
Woo! Okay.
Cool. Well, just before we left, Elliott, we were talking about the potential of issuing IOUs, which, yes, I have received one from the state of California, and my family has received them in Argentina. In Argentina, what was really interesting is they actually issued them as a form of currency. And so I'm pretty comfortable with the idea of diluting currency and what that means. And I'm wondering how you feel that we're diluting currency in this country and whether that's going to create inflation or not.
Well, okay. It will not. It really won't. Because right now, the issue with inflation is that the Federal Reserve is injecting all this cash into the economy, buying bonds from people and banks and issuing cash, giving cash. And the banks don't lend the money. So when the banks start to lend the money, the Fed will start to take the money away. And they mentioned that last week in their minutes. They said, hey, if things go well, we might stop injecting $85 billion a month into the economy. I mean, that's $1 trillion a year. That's a lot of money. So they're already thinking about getting rid of it.
Right.
Now, the thing with the script, the important thing with the script is if Obama threatens to use script, and it's a credible threat, then the Republicans won't. Then the Republicans will give in on the debt ceiling, and he won't have to issue the script in the first place. So by threatening to do it, he won't actually do it if he's a serious poker player. I'm fearful that he's not, because he always seems to blink at the last minute. If the Republicans know he'll blink, then they can act accordingly, and they can box him into a corner. But by proactively saying, this is what I will do if you don't give me debt ceiling authority, he may, catch the pass there.
So you're saying that the Republicans are probably going to call his bluff?
I think they will call his bluff because he's always bent at the end in the past, be it in summer of 11 or just recently now. He gave in a little more than he had to, I think. So, but if he can be strong on this one, this is an easy one to win because who wants to get the script? This is really undesirable, and Obama can say, well, it's because the Republicans won't give us the debt ceiling to pay bills we've already incurred, but I have to do this stupid thing. And the pressure on them will get strong, and they'll have to cave. So he can turn this into a win for himself. I'm not a huge Obama fan personally, but I love the tactics and strategy here.
I think it's really important for us.
Game they're playing.
Yeah,
they can really sink us. If they're not careful, they can sink us, too.
You were mentioning that when on our break we were talking, Elliott, how you're like, if we can just let things move along the way they should move along, we'll be okay. But you were fearful that in 2013 the government could wreck us.
The government could wreck us. That's right. If they do something horrendous on the tax increase side, or similarly on a spending cut side, in a very short run, lots of money, $50 billion, $100 billion more in spending cuts, that could really hurt us because we already got the Social Security $100 billion they're sucking out of our paychecks now. Because of the employee contribution jumped back to its original level. It was 6.4, and now it's 4.4, and it went back up to 6.4. So that's $100 billion there, another $100 billion somewhere else, and that's 2% of GDP. We're only growing at 3%, 2.5%. We could go into the can here. So the government's decisions in March will very much determine the health of the overall economy in 2013, and most definitely the first half of the year. And as a businessman, I'm nervous to invest because I'm fearful that we'll have a self-inflicted recession just because of government stupidity.
That's never happened before.
Right.
So that's really...
This is the fear.
Yeah, so that's really interesting because, like yourself, I'm sure there's so many people that are standing on the sidelines. And are those the investors that are sitting in bonds, or are those the investors that are buying real assets like real estate again?
There's people, certainly people buying real estate because real estate has turned the corner, and your speaker the next hour will talk about that. But it's guys who want to build some plants and equipment who think they'd like to expand their business, but just aren't sure if it's the right time to build and borrow some money, even though rates are low. When we're going to have a 6-month recession, it's not a good idea. Let's do it in 6 months after the recession's over, type of thing. So they want to, it's risky to buy and build investment and all those things. Why the government shouldn't be adding to this? Government should be eliminating risk or reducing it by telling us what they're going to do and being transparent, as opposed to having brawls every several months, it looks like. This continuous, kicking the can and potential disaster time after time. This is not helpful. Even if they end up with a good solution, there's a better way to get there.
So uncertainty is the enemy of progress.
And the government shouldn't be injecting increased uncertainty. That's the problem. Life is uncertain as it is, and the economy is uncertain as it is, and people and businesses, lots of uncertainty. Fine. The government shouldn't systematically make it worse. And that's what they're doing, and that's really, really bad. And any economist will tell you, left of center, right of center, doesn't matter.
And if you just tuned in, you're wondering where all this great information you're hearing, some astute and informed information is coming. Elliott Eisenberg, PhD, nationally known economist, sharing with us what his opinions are and what he's seen going on with our government and the economy and how it can affect you right here in Santa Cruz. It can affect all of us here in Los Angeles and across the nation. And we appreciate you sharing all that great information. Elliott, if you wouldn't mind, give us a little snapshot of what you think 2013, how it plays out for us here, because I know you have your opinions.
Yeah. 13's the first half's looking pretty weak because of the Social Security $100 billion increase in taxes we've already incurred because of the settlement of an end of the year, the fiscal cliff, and we're probably going to get some more now fiscal contractionary policy, which will again slow down the economy some more. So the first 2 quarters don't look hot. 1.5% GDP growth, something like that. But the second half of the year, once these things are behind us, and the government, we can make some plans and know the government's not going to be interfering on a macro level every minute of every day, then things should begin to improve, and we might hit 2% or 2.25% if we're lucky by Q4. So we're going to be going uphill. It'll be getting better quarter by Q3 will be better than Q2, and Q4 will hopefully be better than Q3. I see no indication of inflation going on either, which is important to keep in mind. And I also see the unemployment rate continuing to decline. It should be by the end of the year under 7.5. It's now 7.8. It should fall by about half a point over the next 12 months.
Well, thank you for the hope. It's kind of like that flag at the end of the golf course, and as closer I get to the end of the year or get closer to that flag, the better it should be, right?
It should get better. Of course, assuming the government doesn't derail us, and the Iranians and the Israelis decide not to have a tiff. If they do, then all bets are off again. I mean, there's all kinds of things. And superimposed on all this, keep in mind, we have a minute left, I think, energy is really important too. The fracking and the natural gas discoveries and the oil discoveries all over the country and all these different shales is critically important. In the long run, this will juice our economy, even if you're not in an energy-producing state. I mean, California does produce some energy. It's the 4th or 5th largest oil producer in the country, but compared to North Dakota or something. But this cheaper energy prices will help us.
Yes.
Companies will move here from Europe, fertilizer companies, plastic companies, and so on and so forth. This will be a good big boon for our economy over the next decade or two.
Oh, thank you for that insight. I love that. That's something we haven't brought up on the show before, Elliott. So thank you for bringing that up. Yeah, no doubt. And that's actually nice to hear. I mean, that's good information because we know how that it can affect all of us and all of us right here at the gas pump and all our bills. So, and we really appreciate you joining us, Elliott. We have Elliott Eisenberg, PhD, nationally acclaimed economist. Elliott, can we get you on a regular basis to give us insight of what you see going on?
Consider it done. Consider it done.
Nice.
You got it. It's a deal.
All right, so make sure you check out Elliott's website at econ70.com. Elliott, thank you very much for joining us today. What a hoot and a pleasure having you.
Thank you both. Thank you, Don. Thank you, Gino.
All right.
Fantastic. Have a great afternoon.
Thanks, Elliott. Enjoy your skiing.
Talk soon. Thank you. Thank you.
And we want to thank you for joining the Don and Gino Real Estate and Finance Show. We're going to actually be right back for our dedicated real estate hour with an incredible guest, Jack Cotton, one of the top real estate agents in the country for the last 4 decades. When we come back to the Don and Gino Real Estate and Finance Show in your hometown station, AM 1220 KHTS.